And of course, the food price situation is certainly one of many uncertainties the markets have been facing from a global front. And as one would expect, this is something which has been hitting world equities, including those in India. Let's have a look at our next guest, remaining positive and believing that equities in India will bounce back faster and more significantly than most others. Joining us now is Tanvi Kanchan, Vice President and Head of Strategy at AnandRathi Shares and Stockbrokers. Thank you so much for joining us, Tanvi. Food prices, food inflation is one thing that the RBI is having to actually deal with, but there's a host of other things that the Reserve Bank has to grapple with too. Are they doing the right thing at the moment after, of course, that surprise interest rate hike recently?
Hi, thank you for having me over. So obviously, as you know, India's inflation is somewhere at an 8-year high with April's data also coming in. And just recently, the finance minister announced a number of measures to tackle this inflation, right from subsidizing to reduction in certain fuel prices to increase or hike in export duty in order to, somewhere manage supply chain management. But I think inflation as an approach requires more of a mixed with regards to a rate hike, a mix of duty cuts and also regards to supply chain management. The RBI recently had a rate hike in place, and we are expecting another couple of rate hikes to happen in the next few monetary policy meet that the RBI is doing. So I think the key drivers for the current equity market, which is fundamental liquidity and valuation, at least with regards to the Indian equity markets, are either neutral or positive. So we are expecting that these measures taken by the RBI and the government of India should play well in the medium to long term.
Well, yeah, I was just going to get to the government's role in all this. I mean, they've had a slew of measures here. They've been cutting pump prices here, cutting export duties as well on steel companies. Now, how does that affect the way that you've been looking at your sector preferences?
So, as you saw, the second the government did announce their preferences with regards to the export duty hike and everything, we did see certain major of the steel stocks do tumble. With regards to sector preferences, I think the earning growth in the last financial year, at least for Nifty 50, has been close to over 100%. And the consensus for the earning growth for the next 12 months is somewhere flattish to about 10%. And I think we are expecting a great possibility of it being in a positive trajectory for the next 12 months with respect to surprises as opposed to the negative trajectory, at least in the next 12 months with regards to India. Sector-wise, we are positive on information technology, telecom, cement, capital goods, neutral on financials, oil and gas, and negative somewhere on FMCG, healthcare, chemical durables, auto, iron and steel.
What sort of further earnings downgrades do you expect, though, given as we are focusing on this potential move from these inflationary concerns to growth concerns?
So we're not expecting too much of a degrowth with regards to earnings. So if you know that Nifty 50 on a trailing basis is somewhere at 20 times price to earning ratio, which is an average that what it maintained between 2011 to 2015. Now at a consolidated basis, this is still at a discounted level to what it was trading between 2016 to 2021. So although I wouldn't argue that Indian equities are cheap, but at the same time, they're not too expensive either.
Let's talk about the IPO market, because there's been quite a dichotomy there when you look at some positive momentum and then also some big flops. What's sort of the outlook in your view of the IPO market?
So with regards to the IPO market, I'm a strong advocate of buy and hold strategy with regards to equity investment. Consequently, if there are any secondary market investment, at least with regards to IPO, I would feel that if the fundamentals of the company are strong and the future prospect of the company is bright, such investment should be looked at with regards to at least a longer term hold as opposed to listing gains with regards to current volatility and the current juncture where the equity markets are. I think to take a listing gains with regards to IPOs that is currently lined up would be a riskier bet with regards to the volatility that's there.
And with some of the risks out there and all the volatility, do you expect that there could be an exodus of some of the retail investors?
Absolutely. I think with regards to retail investors, we had an influx of retail investors right when the COVID period started. We saw the retail investors increasing their participation, and I believe that the participation is going to continue. Even though we have seen certain FIIs having a withdrawal from the Indian equities, we have seen the domestic investors remain stable and positive on the Indian markets. With regards to retail investors, I think I would expect them to not have too much of an outflow during this period of time. At the same time, I think the retail investors need to understand that the Indian equity markets are going to remain volatile for the next couple of months. So with regards to an exit strategy right now would do more harm than betterment to their portfolio. So we are not expecting too much of an outflow with regards to even retail investors at this point of time.
All right, Tanvi, we thank you so much for your insights. Tanvi Kanchan, Vice President and Head of Strategy at AnandRathi Shares and Stock Brokers with us there. Let's check in as Indian markets open up. We are seeing some gains.